Investors and traders, welcome to the channel Market Chart Pattern. Today is the 23rd of April. It's Sunday, and today what we are going to do is we are going to take a look at our segment in which we review the major US stock indices. This video is for educational purposes only, and it is not a financial advice. So guys, what we're looking at is the daily chart of the S&P 500 E-mini futures. Now the first thing that I'm going to do here is actually I'm going to clean up the chart a little bit. I don't like messy charts, so here some of the old stuff which was there, I am removing that. Here we go. And I think I'm also going to remove this one. And let me see, also this one. So that was all in the past. Let me actually remove this one as well. This was the ABCD. Here we go. Okay, so a little bit easier to see chart. Okay, that's good. So guys, the last video which I had done, which was a few days ago, apologies, I didn't get the time. I was just a little bit busy the past week, so I couldn't do one intra week. So but all the information is still the same. The level that we were talking about in the last video, it's pretty much there. We were looking for maybe the market which could grind up to 4,225. That still remains a possibility, and we are drawn this resistance zone. And also looking to the left hand side, we have the structural resistance here, in fact. And also we had completed this ABCD formation. So the message was that, okay, we are in a zone in which we could have the market could face resistance, but there is a possibility that it could grind up to actually reach this 4,225 level. And from here, for the time being, do not have any further upside targets. There's a bigger ABCD which could actually see the S&P 500 reach to 4,500 level, thereabouts roughly. But what is really important is that we have to take things one by one, and then we'll have to see whether this 42,225.35 level, how the price is going to behave around this period in the next week or couple of weeks. So guys, what has happened is that you can see last week has been a fairly choppy week. And the price action, if you're watching intraday, you'll notice that it was fairly sideways, and then we have had some days in which the market actually moved lower. But look, it's still, this is the kind of the structural low. Here we go, let me just point it out. This is the low which the market needs to take to the downside before we begin to say that actually from a market structure point of view something is changing. But what we do here is we use this one-to-one projection ABCD with Fibonacci expansions, retracements, and projections, which actually are leading indicators. So we try to actually anticipate or forecast what the market could do, and that's how we come up with the levels. So what I'm going to do is in this video I'm focusing more on the S&P 500, and I'm going to go down to, let's say, shorter time period, which is the 30-minute chart. So I'm just going to blow this up, and I'm going to show you something. So by blowing this up, what we can see is that this is where we have had one touchdown, two touchdown, three touchdown, so a pretty good support level, and the market actually began to rally from here. And let me see if there was some ABCD formation right there and there. And guys, there you go. There was this ABCD formation coming around 41.90 roughly. You can say that 41.90, 41.95, and the high we reached was about 41.98 and a quarter. Let me be precise. Yes, 41.98 and a quarter. So that was the ABCD. This one I'm going to remove for now. Now, let's do something. Let's try to draw our Fibonacci retracement here, right from the low here. We can actually also take this low, and this was the high, 41.98 and a quarter. So last Friday, the market touched this 61.8% Fibonacci retracement right to the tick. In fact, this was the second touch. This is the first one on the 20th of April, which is last Thursday. So what we can say is that this was a double bottom. This price action is kind of similar to what we're seeing here. Maybe there's a possibility of a third one here as well. So market remains choppy actually, but there's one more interesting thing happening as well. So let's see if we take this and do our one-to-one price projection here. And what we can also see is there's a confluence level. So we have this one-to-one projection, which I'm going to call A, B, C, D. Let me actually write it here. A, to make things a little bit clear to see. B, this is our point C. And finally we have D here. And it was like one touch, then a second touch. So kind of double bottom, kind of what happened around here. So just to illustrate this, so that we can see it a little bit more clearly here, we just color this in like this. There we go. So guys, here we have something interesting, and in a really choppy price action, if this turns out to be around this level, which is around 41.37 in the S&P 500 E-mini futures, if this one turns out to be a pretty good low, let's try to see a Fibonacci expansion of this entire swing low. We get two targets. We get 1.272 expansion of 42.12 and 1.618 expansion of 42.33 thereabouts, which is, you know, really close to that 42.25 level that we were talking about. Now here, I have not looked at any other ABCD of a smaller degree, but there might be some other ABCD which could actually take us there. And in fact, let's try to do this. And there we go. So we also have an ABCD formation. So let me actually try drawing this line like this, a little bit easier to see. And what I'm going to do now is just clone this one. And what I'm going to do is just project it from here. There we go. So guys, this level around here, there is a possibility that market actually over the next week, maybe a couple of weeks, try to reach for this zone of 42.25 to 42.36 thereabouts. So we have this. Now the key thing for this is this low of last Thursday and Friday, 41.37 thereabouts, remains as the low. Then this gives us a one-to-one projection of A, B, C, D higher here. So let me actually write it here. And I'm gonna use, let's say, this color, a different color. Oops. So A, B, C, and a possible D, if indeed market is moving in this structure. And then we have the 1.618 expansion of this BC swing. So guys, I hope from an educational perspective, I do apologize that this video is actually getting a little bit longer, but I wanted to spend a little bit more time using S&P 500, liquid market, a widely followed US stock index. To give an example of how we actually look at this structure, how we like to use ABCD and Fibonacci um, expansions, and the level of confluence where they come together, because what we are looking at is basically harmonics. This is not Elliott wave. We are actually looking at harmonics, and here we have come up with a one-to-one projection and an expansion of Fibonacci BC swing to 1.618, and we have a confluence zone forming here. So this is why we need to pay attention to this level of anywhere between 42.25 to 42.35 thereabouts. Now it is all dependent upon whether this low of 41.37 will stick, because that's our C point. If it gives way, then this structure that we had looked at, it needs to be readjusted, and it might be the case that this ABC formation will not take place if the market just keeps on falling, and then we have to look at it in a different way. So guys, I hope you understood, or I was able to provide some educational value here. So I'm going to go through some of the other indices, but I'm going to do them in a quicker way because the videos get pretty long. And here we go. So this is the NQ. So NQ had actually reached our target and actually exceeded our target of 13,275. It's also just like S&P 500, just been in a choppy sideways action last week, consolidating. This low has not been taken out, so probability remains that it's gonna go, maybe try to test this high, maybe try to be a little bit higher. I'm not gonna use some Fibonacci to come up with new targets for the sake of saving the time. Let's take a look at Russell 2000. So this index is look at look at NQ and Russell, the small caps, totally different. Here this one again, sideways choppy action. It's just not finding a lot of resistance from this zone which we had identified from before. It really needs to get above 1852 to kind of have more strength in it, and it just remains, small caps remains under pressure, which is kind of expected because of the interest rates rising so much, and these are smaller companies that don't have that well-defined balance sheet like a fortress balance sheet. And then what we're going to do is we're quickly going to look at the Dow Jones future. So this one actually went back into the trading range, testing the upper end of it. The good thing is that this index was actually above its 61.8% Fibonacci retracement, and pretty choppy action. So guys, next week, I believe on Thursday, we have the US GDP figures coming out. So I think we could anticipate some sort of action coming out next week because of some economic important releases. So that's going to give us some further clues. So guys, this is what we are looking at, and I really hope that I was able to show some of how I look at some of these pattern formations, especially this one-to-one ABCD formations. And guys, if you find this video of educational value, then please do like the video, and if you enjoy, or if you value how we look at these markets, how we try to come up with the price levels where the market would actually reach, or as targets, or market could find supports or resistance, etc., please do subscribe to the channel, and also hit that bell icon button. That way you'll know when the new videos are being posted. So thank you very much for watching. Apologies again for the video getting a little bit longer. Good luck and good trading.